Hi, and welcome to episode 5 of our tax update series. I'm Andy Rainford, Chartered Tax Advisor and one of the content editors here at Tax Essentials for Advisors. This week's general news includes the recent government U-turn on the winter fuel payment and a related new scam doing the rounds. From HMRC, we have updates regarding last year's cyber attack and the recent errors with Class 2 NI. We'll round off with cases concerning the meaning of trading company for business asset disposal relief and the conditions for the education exemption to apply for VAT purposes. So first up, the government has partly backtracked on the controversial restrictions it imposed on the winter fuel payment last year. As you may recall, it was removed from all those with incomes above around £11,600. After a backlash, the government has now confirmed that all households with a state pension recipient will receive the payment this year. However, if anyone in the household of state pension age has income above £35,000, the payment will be recovered. This will either be done automatically at source, e.g. from private pension payments, or through self-assessment as applicable. The government has said no one will need to register with HMRC or take any other action. Sadly, almost immediately, we became aware of a new phishing scam. Criminals are targeting pensioners by sending a text message purportedly from the Department for Work and Pensions. The text says that they must click on a link and apply for the payment or risk losing out. You should contact potentially affected clients and assure them that no application is required and that the message should be ignored with the sender blocked. HMRC recently revealed that nearly £47 million was stolen last year after 100,000 tax accounts became compromised. It's important to note that no individual has suffered a financial loss as a result, though the public purse certainly did. In response, the department locked down accounts with unusual activity. This involved deleting the government gateway credentials. If you have clients that were affected, they should receive a letter this month. This will tell them how to regain access. In further HMRC news, it recently came to light that a number of taxpayers have received an SA 302 calculation showing an amount of Class 2 national insurance due for payment. This was incorrect, as compulsory Class 2 was abolished for 2024-25, though it can still be paid voluntarily. It seems that HMRC's system wasn't prepared for the update and has automatically amended the calculation to show the amount for those with profits in excess of the small profits threshold. You can advise clients that they don't need to pay this. A fix is currently being developed. Okay, on to cases, always my favourite part of the episode. In this first case, the first-tier tribunal heard an appeal from Mr. and Mrs. Moffat. The couple ran a company that provided numerous boating-related services. It offered moorings, repairs, maintenance, and various other related things. They sold their shares and claimed what was then called entrepreneur's relief. HMRC refused the claim, saying that a significant proportion of the services were non-trading, so relief couldn't apply. It also imposed a penalty for supposed carelessness. The tribunal agreed that relief wasn't due, but threw out HMRC's claim that not seeking professional advice or confirmation from an officer constituted carelessness. It said that it was trying to impose a counsel of perfection on the couple. The penalty was cancelled, but unfortunately the couple will still have to pay a boatload of tax. And finally, this company provided a variety of fitness classes, many of which were described as having a dance element. The company assumed that the fees would be exempt under Schedule 9, Group 6. This provides an exemption for education, including private tuition. However, it only applies to subjects that are ordinarily taught in a school or a university. The company argued that dance was often taught in schools. However, the tribunal said that there was a clear difference between a GCSE course in dance and a fitness-based class with some dance elements. The exemption didn't apply, and HMRC's assessment was upheld, as was a £4,000 penalty. Right, that's it for this episode. Thanks for joining me, Andy Rainford, your host and eagle-eyed tax diva. Remember, if you missed our recent webinar on making tax digital, you can view it at the link shown here. It really is worth a look. Our next event will look at the recent changes for non-DOMs and will be on the 24th of July. I'll let you know how to register in the next episode. Until then, bye for now.